The United States is now burdened with an unimaginable $33 trillion in debt, more than the combined economies of Europe, Africa, and South America. For years, the US has relied on its ability to borrow money by issuing treasury bonds. But what would happen if the world suddenly stopped buying this debt? The impact would be catastrophic, not just for the US, but for the entire global economy. Higher interest rates, a crashing dollar, runaway inflation, and widespread economic instability could be just the beginning. If foreign governments and investors lose confidence in US debt, it could trigger a financial crisis that would shake the foundations of the global financial system. For decades, US Treasury bonds have been seen as one of the safest investments available. Countries like China, Japan, and many European nations have purchased these bonds in massive amounts, viewing them as a secure way to stabilize their own currencies and build financial reserves. The US government has taken advantage of this demand by borrowing large sums of money at low interest rates, using it to fund everything from military operations to social programs. The belief in the safety of US debt has allowed the government to run huge deficits without facing immediate financial distress. However, the situation is becoming increasingly untenable. The US debt has been growing at an alarming rate, particularly since the 2008 financial crisis. To stimulate the economy, the government passed massive stimulus packages, and the Federal Reserve slashed interest rates to near zero. As a result, the national debt tripled over the course of just a few years. By 2023, the debt had reached $33 trillion, and the cost of servicing that debt is rapidly becoming unsustainable. The US is paying an unprecedented $3 billion every single day just to cover the interest on its debt. If this continues, the government will eventually be forced to divert funds from essential services like healthcare, social security, and infrastructure just to keep up with interest payments. The problem is compounded by the fact that the US must borrow even more money each year to pay off the interest on its existing debt. With interest rates rising and the debt growing exponentially, the cost of servicing the debt will only increase. This creates a dangerous cycle where rising debt leads to higher interest payments, which in turn requires even more borrowing. This situation is not sustainable, and the US could soon find itself in a position where it cannot afford to pay back its debt without making drastic cuts to government spending or raising taxes. The threat to US debt becomes more pressing as foreign governments and investors begin to lose confidence in the US economy. Over the past few years, China, Japan, and other foreign powers have begun selling off US Treasury bonds. In the case of China, the world's largest foreign holder of US debt, the country has reduced its holdings by more than $340 billion in recent years. Japan, the second largest holder, has also begun cutting back on its US bond purchases. This shift away from US debt is a signal that foreign governments are increasingly concerned about the stability of the US financial system. If this trend continues and other countries follow suit, the consequences could be severe. A massive sell-off of US debt would drive up interest rates, making it more expensive for the US government to borrow money. This would only make the country's debt problem worse, as the government would have to pay higher interest rates on its growing debt load. Additionally, higher interest rates would increase borrowing costs for everyday Americans. Mortgages, car loans, and credit card rates would all go up, reducing purchasing power and slowing down economic activity. The impact of a sell-off in US debt would not be limited to higher interest rates. A sudden drop in demand for US Treasury bonds would also weaken the US dollar. Foreign investors holding US debt would likely sell off their US dollars as well, flooding the market with the currency and causing its value to drop. A weaker dollar would lead to inflation as the cost of imported goods rises. The US relies heavily on imports, and as the dollar's value falls, everyday items like fuel, electronics, and food would become more expensive. This would lead to a dramatic increase in the cost of living for American households. Inflation would not be confined to the US alone. The US dollar is the world's reserve currency, meaning it is held by central banks around the world. A collapse in the value of the dollar would have far-reaching consequences for global financial stability. Countries that hold large amounts of US debt in their reserves, such as China, would see the value of those assets plummet. This could trigger a global financial panic as investors rush to sell off dollar-denominated assets. The resulting instability could cause stock markets to crash, disrupt global trade, and send economies into recession. If the US government is unable to manage this crisis, it could trigger a shift in the global financial system. The US dollar has long been the world's primary reserve currency, but a loss of confidence in US debt could cause other currencies, such as the euro or the Chinese yuan, to gain prominence. If countries around the world begin to reduce their reliance on the dollar, it would undermine the US's position as the world's financial superpower. This could lead to a fragmented global financial system, with nations increasingly trading with each other in their own currencies, rather than relying on the dollar as the universal standard. The US government would be faced with two difficult choices. The first would be to implement austerity measures. This could involve cutting government spending and raising taxes to reduce the national debt. While this might help reduce the deficit in the long term, austerity would be politically unpopular and would cause significant hardship for American citizens. Social programs like Medicare, Social Security, and welfare would likely face cuts, and the government could be forced to scale back its military and infrastructure spending. These measures would hurt millions of Americans, particularly those who rely on government assistance. The second option would be to print more money, a strategy that the Federal Reserve has employed in the past through quantitative easing. By increasing the money supply, the government could reduce the real value of its debt, making it easier to pay it off. However, this would come at a steep cost. Printing more money would lead to runaway inflation, which would further devalue the dollar and increase the cost of living for Americans. Prices for everyday goods would soar, and the US could find itself trapped in a cycle of hyperinflation, where the currency becomes worthless and the economy collapses. The US is already in a precarious financial position, and if it does not take immediate action, the situation could spiral out of control. Foreign investors and governments are losing confidence in US debt, and if this trend continues, the country could face a full-blown financial crisis. The global economy is heavily dependent on the stability of the US financial system, and if that system collapses, it could trigger a global recession. The dollar could lose its status as the world's reserve currency, and countries could begin shifting away from the dollar, undermining US economic power. There is no easy solution to this crisis. The US government must find a way to reduce its national debt and restore confidence in its ability to manage its finances. This may require a combination of austerity measures, structural reforms, and fiscal discipline. Without significant changes, the US risks a future where it can no longer borrow at low interest rates and must face the consequences of its mounting debt. If foreign governments and investors lose faith in US debt, the fallout would be felt around the world, with potentially catastrophic consequences for global financial stability. What do you think will happen if the US is unable to manage its debt crisis? Let us know in the comments below. Don't forget to like, subscribe, and hit the bell icon for more updates on this critical issue.